Hello and welcome to another edition of Compass, the Sectoral Chart Book from DSP Mutual Fund. My name is Suryanarayanan. I will be talking about the IT sector and the broad trends that we are seeing there, and also explain why we have a positive view on the sector. The IT sector broadly represents 14% of the market, and also in terms of profit contribution, it has about 14% contribution to the overall profit of the market. When you look at the overall Indian IT sector, it operates within the global enterprise IT market. And NASSCOM data helps us get a sense of how this Indian market is growing within the global IT market. So the green bars here represent the growth in Indian IT BPM exports. And as you can see, the growth rate, which used to be fairly healthy double digits a decade and a half back, has slowly been coming down. But if you look at it in the context of the global IT BPM industry, what you can see is that there was a much sharper increase in market share that we saw in the earlier years, which in the recent years has sort of reduced a bit. And this is reflected in the reduced gap between the green bars and the blue bars. And that's the trend that we had been seeing till now, pre-COVID. Now, let's try and understand, how the overall market itself is expected to grow. So, post-COVID, everybody knows that there has been an increase in technology intensity and focus on technology projects across the board. This can be seen in this chart, which basically tells you the proportion of enterprise IT spend globally as a ratio of the world GDP. So this ratio during the dot-com boom clearly was increasing at a very rapid pace. And you can see that it went up from a little close to 1% to as high as 1.5% in a very short span of 4-5 years. And since then, it had come down and has been in a stable range of somewhere between 1.1 to 1.2% in the last many years, and recently has started inching up again. And these are estimates from the research agency Gartner. And according to them, this ratio is expected to rise once again over the next 5 years and likely to touch 1.4%. So this is a very healthy trend, which is underlying the strong demand that we hear for IT services broadly. Now, when you look at how the Indian IT companies have performed in this context, their growth rates have also been going up. So this is the quarterly YOY revenue growth for a group of about 10 Indian IT companies. And as you can see, post-COVID, their growth rates have steadily gone up. And there is obviously an impact of base effect. But even if you strip away the effect of the low base, which was there during the COVID period in 2020, the growth rates are still higher than what we had seen pre-COVID. So summary is that there is increase in demand trends globally, and the Indian IT companies are also reflecting that trend. Now, if you look at how Indian IT companies have coped in terms of profitability, they have done fairly well. So typically the margins for the companies have stayed within a certain band, and you can see that there is a little bit of cyclicality that we have seen in the past. And as we speak today, the margins have gone on to be at the higher end of that range. Now, this is obviously helped by tailwinds that emerged because of COVID. So there has not been any travel that companies have had to do. Their employees have not been required to travel to client locations or to on-site locations because of COVID, because international travel and domestic travel was restricted. So this obviously contributed to increased profitability. In addition to that, there has also been higher proportion of work which has been delivered from offshore locations, which is a more profitable part of the business. And that's also contributed to higher margins. So in effect, it's a combination of good growth, strong growth, and the absence of some costs which were typically seen for the sector, which has contributed to the increase in margins. As we go ahead, some of these tailwinds could minimize, but we will also see that companies are trying to adjust their cost structure in the form of higher fresher headcount, and also trying to get some level of pricing increases from customers, which should help them offset some of these margin pressures which will come through as these cost tailwinds go away. When you look at the valuations, valuations have obviously gone up very sharply post-COVID, and this is obviously reflective of the expectation that growth rates are expected to be strong in the coming few years. But in recent few months, we have seen a little bit of a correction where valuations from the peak levels have come down by about 15 to 20%. But this is still definitely higher than the long-term average. But in the context of the strong growth rates, we feel that the valuations may not necessarily go to the long-term average, but still stay elevated, given that we are seeing growth rates which are higher than what we have seen in the recent past. So that's the summary of our views on the sector. If you have any comments, suggestions, or questions, please drop them in the comment section below, and do subscribe to our channel.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.